And another one of the big dogs getting hit hard here on disappointing earnings. Facebook down more than 21% after hours. We have to dive straight into the numbers, look at the headlines, and then we'll go into the quarterly earnings report to see what happened to Facebook or Meta. So the headlines were, so as we see, 21% down after hours, which is obviously crazy, insane for Facebook, given that Facebook is currently at a market cap of around 900 billion. So a lot of selling pressure here. So we had the Q4 earnings coming out, being released after hours here today. I think when we look at the revenue number, we are slightly up from in line compared to expectations. Earnings per share are down. So basically, what that means is that net income must have had some sort of hit, and we're gonna get into what exactly happened here. Ad revenue slightly up. Monthly active users 2.9 billion versus expectation of 2.9 billion, so in line with expectation here, as well as the other Meta app family monthly users. So we're actually overall in line with expectation, I would say, but earnings per share obviously took a hit here, so it has to come from the bottom line as revenue slowly increased and are actually increased in line with expectation. There has to be something here in the bottom line, and I think the answer is there's a few things actually that are concerning for investors. So I've pulled up here the earnings report that has just been released. As we can see, we're talking about a solid quarter here, Mark Zuckerberg. Total revenue, actually, when you look at it from a year-to-year perspective, it's up 20%, so that's quite nice. But then when you come back down here to the net income line, this is when you see, okay, this is what's causing the issue here, and a decline of 8% here compared to the 3 months ended last year. So obviously there was some increased cost and pressure on the margin, operating margin here as well. So we're looking at pressures on the cost of sales, but also pressures on the admin and other operating expenses, which is ultimately decreasing net income to a still good number of $10 billion, obviously, but a decrease from the previous year, which we don't really see that often from Facebook or Meta. So, and they basically go into the detail here on sort of the CFO goes on the detail saying what caused these headwinds or what caused the decrease that they are actually talking about. So I think first of all we have to mention that another reason why the 21%, because actually we're saying we're kind of in line, slightly below expectation for the earnings per share, but the actual also issue is the outlook for 2022, which is now 27 to 29 billion versus expected. I think analysts have expected something around the 30 odd billion dollars. Yes, exactly. So analyst expectation for the next quarter was 30 billion, but now basically CFO and Meta coming out saying, well, we think it's going to be more likely 27 billion to 29 billion. So, and they outline the reasoning for that here, which is also the reason we saw net income already decreasing. So we say basically saying there's pressure on the impression side plus pressure on the pricing side. So for Facebook, I think that's a double hit. Like, that's definitely not something you want to see. You don't want to get less people coming to you and also pay less. I mean, one of those variables have to go up in order for Facebook to keep continuing their net income. So this is obviously an issue here. First one to be called out is the Apple iOS changes. So I think that's why stocks like Facebook, Pinterest, and Snap already dropped on the last quarter earnings. Basically, privacy changes affecting the way of how things are getting advertised to the right people on Facebook, making their advertisement, less effective, basically, because it's now targeting sometimes the wrong people. So this is obviously something that costs Facebook more, as they couldn't advertise the right people, for their customers, for their clients. leading to less advertising expenses as well. Other than that, obviously the macroeconomic factors, costs like inflation, supply chain disruption, so that's also impacting Facebook indirectly, because obviously they don't have any capex or any big expenses, but their customers who advertise on their platforms do have that, and marketing, advertising budgets, when costs increase and margins get suppressed, usually that's the first thing to take a hit. So so Facebook basically seeing that indirect impact on their numbers of, you know, advertisers lowering their budget or taking off ads on Facebook, Instagram, and so on. The other point mentioned, a foreign exchange headwind. I mean, yeah, that's definitely some impact there, but I think the first two here are the key factors. Plus also that they're saying on the impression side, we expect continued headwinds from both increased competition for people's time and a shift of engagement within our apps towards video services like Reels, which monetize at a lower rate than feed and stories. So that's actually interesting, right? That people are more moving towards Reels, which is like a TikTok type feature that Instagram has introduced to compete with TikTok, to stay relevant. But those types of videos, those types of formats generate less income, so it gets monetized at a lower rate, which is obviously kind of almost self-destructing for someone that is on your app but is looking more towards the real side than your actual other content and than stories and posts. So definitely something to have in mind. So the reaction is understandable. So you can say, okay, we do have massive headwinds here. We do have much lower revenue, still sitting at a $27 to $29 billion, which is a massive number if you think about it. So it's not like the end of the day for Facebook and for Meta. But I do understand that sharp reaction of the market to an extent. But I do think that, if you look at it from that perspective now, taking off 20% of your 900 means it's gonna be like a $180 billion, so almost a $200 billion taken off here, brings the valuation down to $700 billion market cap for Facebook, which still has huge free cash flow, huge net income, although it was decreasing. I mean, obviously the fear here is that we're gonna continue to decrease, but I do think as we see supply chain ease up, inflation might tickle down this year, that Facebook then can actually post some increasing numbers and some better numbers going forward. So we do have to be a bit patient here. But at the moment, I understand sort of some of the investors being a bit, afraid now and being a bit shocked by those news. But if you're a long-term investor into Facebook, I don't think much has changed. I mean, look at this free cash flow; like, it's insane. And they obviously just recently changed their name to Meta, which indicates their move or their vision towards a metaverse type like environment, which they will invest billions of dollars into. So if you believe in that vision and that story, then Facebook might be a good buy at those levels. I'm certainly considering to buy the dip. But that's all I wanted to really discuss with you. Just a short update on the earnings here. Obviously it was a shocking earnings. Let me know what you think about Facebook, if you're buying, selling, holding, or what your plan is to do. But yeah, see you in the next video.